Hello traders, Gary Wagner here. Approximately 1:45 in Honolulu, 6:45 in New York. It is Thursday, 25th day of February, 2021, and this is the daily report for gold and silver. Higher yields in treasuries over this last week, going to a one-year high of 1.5%. Caused not only the precious metals to sell off dramatically, but also U.S. equities to tumble. At its low, the Dow was down about 650 points. But across the board in all sectors of the U.S. equities markets, we saw damages sustained, and to a degree of about 3.5% in the case of NASDAQ. We'll talk about that during the show. We'll also talk about the fact that gold is at an extremely critical level because it is now traded again to the double low, as well as talk about the trade alerts we sent out this morning. It was an absolutely brutal day with selling pressure across the board in multiple asset classes, including risk-on equities, as well as the precious metals, all trading lower on the day. One of the hardest drawdowns in terms of the indexes themselves was the NASDAQ, losing 478 points, 3.5%. And currently fixed at 13,119 and change. You can absolutely see the kind of carnage that was witnessed in trading today by looking at this daily chart, this long red candle. We can also see when we look at a much longer term chart that this market has been on a basic uptrend since April of last year, and it seems to have topped out over the last 2 weeks. This is a weekly chart. The Dow lost 1.75%, which is approximately 560 points, while the Standard & Poor's 500 lost 2.45%, currently fixed at 3829.34. Today, gold sustained a drawdown back below 1,800, $28.80. That is the decline, 1.6%. And currently, we have April futures fixed at $1,769.10. The first chart that we are looking at on today's show is a daily gold chart. This represents April futures. We can see the dramatic sell-off that occurred today. That is this large red candle right here. You can see that it is currently opened up in Australia. That represents this small candle right here. And what is most noteworthy, first of all, is that it appears as though we're testing this double bottom that occurred first in November and then around the middle of February and then throughout the remainder of this month. The other thing that we talked about yesterday is the fact that we do see a distinct possibility. We've already seen a death cross, the point in time in which the shortest term 50-day moving average crosses below the 200-day moving average. It now appears as though the 100-day moving average is going to cross below the 200-day moving average, lending further evidence to either a consolidating market in this area and building a base or lower pricing. Now, if it does break through this critical low, which I'm putting at around 1766, the real area has got to be about 1750. If it cannot hold that area, we have to redefine the chart we're looking at to get a better description of where gold could trade to. And traders, to accomplish that, we have compressed the chart first of all. The second thing is we're looking at the longest term data set that we've been using over the last year or so, which is March low of 2020 up to the highs of August when it hit 2,088. One of the things that you'll see when we look at more data is that the double bottom that we were speaking about occurred here in November and then again here. However, take a look at this entire area. This area is a point in which the market was moving up, and we saw real resistance come in which we had a 3-month time period in which the market was caught between $1,770 and $1,694. Really wasn't until the beginning of July when the market broke above that and started to go to these record highs that were achieved in August. Therefore, if we do break through this area, I really believe it to be absolutely critical. We could easily head to $1,700 per ounce. On the other hand, this is such a strong area in terms of a technical base that we could see gold pricing find support here. Silver also traded under pressure, giving up 1.6%. currently fixed at 27.41 cents. We sent out a special trade alert to raise stop, and then we sent out an additional one to take your silver futures position to the market. It was trading anywhere between 27.43 and 45. That would be your exit point. Also, in both spot silver as well as SLV, we sent out the trade alert to raise stops. In the case of SLV, that will lock profits in because we are in two different legs at 22.95 and again at 24.60. We have moved all of our stops now to 24.99. The low today was 25.40. It's a much more long-term trade. In terms of the spot silver trade, that's at 27.41.6, but the low is what is important because we have stops in Forex now at 27.39. They were not hit, but could easily get hit if we see any more downside pressure as the market continues to trade overseas. As far as silver goes, we are maintaining the spot or Forex positions as well as SLV. We're looking at the March contract of silver futures. It will soon change to May, which was one of the reasons that I took the stop to the market on silver futures. It's currently trading at 27.60, and as I said, you should have gotten out around 45 with a little bit of profit. But we can clearly see a couple of things, and that is most importantly this resistance area that has come in at the tops right at about 28.40. You can see a whole series of tops here. We have solid support at 25.75, and as I said, we need to break above this and then take out our targets of $30 up to about 33. I think that if they pass some sort of fiscal stimulus, that will really propel silver higher, and that could occur as early as tomorrow when the first vote comes in from Congress. Platinum futures did get hit hard, down 2.71%, a decline of about $34, and is currently back down to $1,223.80. And traders, as far as platinum goes, there's no doubt it has been trading under pressure. It came close to stopping us out. It is trading right now at $12.24, so it still could hit our stop. My sense is that on a short-term basis, we have formed a level of support, and you can see it in these lows right here, and that's right where our stop is, right below this particular price point. As long as it holds here, we could see it move higher. If it does break below here, it could go as low as the 23% retracement, which is 1167.70. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.